Equity markets had a big week after a recovery after an early sell-off following oil and energy companies on Monday. We saw the market rally. It basically mirrored last week's range, right around 27.17 up to 28.75, and we'll settle just below last Friday's settle. So it looks like almost a non-event week if you weren't here, but a lot happened, and obviously it started with energy, started with oil, it progressed into earnings, and then hope and optimism came back. On an announcement that the government, Congress has passed a stimulus. They're going to feed this down. Hopefully, it will continue to keep small businesses afloat, keep companies paying their people, which will keep everyone at bay until this lockdown ends. At this point, the market trades on a lot of hope and optimism, which I've said before isn't a bad thing as long as it remains in check. And as earnings come out, the forward guidance numbers are very unclear. So at this point, we don't know where we're going to be in 6 months to a year. But the equity markets feel that there's going to be, I think, a little more optimism than maybe we're seeing over in the bond market. And at this point right now, that's okay. But it was really kind of a week where we stayed the range as we basically mirrored last week's trading range as well. So market volatility came back a little bit. The VIX index is down in the 30s, and that does feel like it's come way down from those highs. But if you go back a few months, 30 would have been a new high. So at this point, we'll take what we can get. Volatility's come down. The ranges have narrowed. We haven't seen those knee-jerk reactions. We have seen trades down and we have seen trades higher, but we haven't seen them all occur at once. And this week's 160-ish point range kind of feels like a Thursday in March, and we didn't have that. So it took us a week to do that, and I think that's a good thing. So market is starting to normalize slightly, but every day and every week is a new adventure. So as we get the VIX down to 30, I think you can breathe some sigh of relief, but you can't be too careless here in this market because things can change very quickly. Lastly, we look ahead. Well, we're going to continue to watch Congress. They unveiled this new stimulus package, which will hopefully be another sign of hope and optimism that the stock market's trading off of. But we also have a Fed meeting, so we're going to keep an eye on the Fed. It's unlikely they're going to come in and change anything they've done. Obviously, they're scaling back some of their bond purchases. Rates are going to stay where they are near zero. And the Fed's going to stay continuing to do what they do best, and that is prepare and wait for something way to fix the markets. Some believe that's a good thing. Some believe that's not such a good thing. Open market price discovery has always been the way. I think at this point, the Fed getting involved puts an inherent put in the market. We saw that back in 2008, and I think at this point, we're starting to see it now as well. But risk takers will be risk takers, and I think at this point, we will watch them price in more optimism than maybe is garnered at this point. However, I think that as we move forward, we'll get more clarity, and that will be a good thing for everyone, the stock market included. So as we go, started the week off on a down note, we really recovered quite strongly. We're going to end slightly lower than last Friday's mark. However, we have a big week next week, more earnings and a Fed meeting, and likely some more hope and optimism.